When prices keep going up all the time, that's called inflation, it means our money can't buy as much stuff as before. Inflation makes our money not as strong, so when prices rise a lot, keeping our savings in cash or banks may not be the smartest choice. For instance, if the interest we get from a bank is only 1%, but prices are going up by 10%, then our savings will actually become less valuable. So, where else can we find a better option to keep our money safe and not lose its value? In this video, we'll talk about 7 types of things you can invest in to keep your money safe when there is inflation. There are various options, but each has its own features and a balance between possible gains and risks. 1. Stocks. Stocks, which represent ownership in a company, are a crucial way to move money around. They come from businesses known as joint stock companies. If you buy these shares, you become a shareholder and part owner of that company. Even though stocks have their risks, they are an essential part of a well-rounded investment plan that safeguards against inflation over time. Picking the right companies for your investments doesn't just shield your savings. It can also make you money. However, it's not wise to invest everything in one place because there are risks involved. The shorter your investment plan, the more cautious you should be. One smart move is investing in shares of raw material and production companies, or putting money into the agricultural sector, where there's noticeable growth, especially due to sanctions from the conflict in Ukraine. Another strategy is to invest in companies dealing with high-margin products or services, such as medical services, the IT industry, or energy companies. 2. Inflation-linked bonds. Inflation-linked bonds are a way to protect your money from rising prices, and they also offer attractive interest rates. These bonds shield investors from the decreasing value of their invested money caused by increasing inflation. Essentially, the value of these bonds goes up as inflation rises each month. When inflation is on the rise, choosing long-term index-linked bonds tends to be more profitable than opting for short-term or long-term fixed-rate bonds. With government bonds, investors lend money to the state at a certain interest rate. Short-term bond interest rates stay fixed and don't guarantee protection from inflation. 3. Gold and other precious metals. Putting money into gold and other precious metals is considered an alternative way to invest. You can do this directly or indirectly. The direct approach involves physically owning gold or other precious metals, like buying jewelry, collectibles, or bullion products. On the other hand, indirect investments allow you to benefit from changes in the gold price without actually owning it in a physical form. There are various ways to invest in gold, like ETFs, exchange-traded funds, commodities funds, structured products, gold futures and options, gold certificates, and shares in gold mining companies. It's important to note that while gold typically serves as a good protection against inflation in the long run, its value may drop in the short term if inflation increases due to anticipated interest rate hikes. Investing in gold isn't a quick way to make a profit. Additionally, investing in rare and beautiful things like art or unique alcohols requires more money, comes with storage expenses, but often sees an increase in value over an extended period, especially in the long term. Real assets tend to maintain their value better when they are rare, limited, and exclusive. 4. Real estate. Putting money into real estate can be a good way to make a profit over a long period, especially when its value goes up with increasing inflation. There are different ways to invest in real estate, such as flipping houses, buying, renovating, and selling them for a profit, investing in condo hotels or apartments, making money by renting out real estate, and investing in commercial real estate through methods like equity crowdfunding or crowd investing. A commonly chosen method is to invest in housing for long-term rentals, which can quickly start making a profit. Investors also look into short-term rentals and flipping. That means buying a property in a good location, fixing it up, and selling it for a considerable percentage more than the initial purchase price. Investing in real estate is considered one of the safest ways to invest money. Crucially, it stands out as the only financial option that can offer a relatively high rate of return along with a strong level of security. 5. Investment in other currencies. Not everyone opts to invest in stock exchanges, and investing in real estate or artworks typically demands a considerable amount of money. If inflation coincides with the decline in the value of the national currency, One strategy to safeguard savings is by investing in foreign currencies like the US dollar, euro, Swiss franc, British pound, or Indian rupee. In reality, the profit from this approach may only be modest since, for instance, the value of the euro might rise in tandem with inflation. However, it's not necessarily bad news because, at the very least, inflation won't erode our savings. Still, it's crucial to remember that predicting exchange rates is challenging and comes with significant risks. A single decision from the Fed or other central banks can completely alter the situation overnight. 6. Buy REITs, or real estate investment trusts, are companies that poses, operate, or provide funds for income-generating real estate across various sectors. In this context, the REIT industry mainly involves landlords who own different types of properties, such as office buildings, shopping malls, residential apartments, warehouses, and storage units. The key point here is how these landlords use an inflation hedge strategy. When inflation occurs, the general cost of living tends to rise. To counteract this, landlords have the ability to increase rents on the properties they own. By doing so, they ensure that the income generated from their real estate investments keeps pace with or reflects the increased cost of living. 7. Revisit spending. In periods of inflation, it's wise to reconsider how you manage your expenses. As prices increase, some of your usual spending habits might need adjustment. Trimming unnecessary expenditures or reevaluating certain choices can be a smart way to save money both in the present and for the future. It's about adapting your budget to the changing economic conditions and ensuring you make financially prudent decisions. Successfully dealing with inflation often involves planning for the future and preparing to adjust during emergencies or economic downturns. Take the time to carefully consider your priorities and make decisions about areas where you can cut back. So, this is it today. If you like the video, then do consider to subscribe to our channel and share this video in your circle. We hope to see you in the next video.